have it for later. Okay, awesome. Welcome to our Making Money in Forex and Reversal Patterns webinar. Thank you so much for being with me today. I am very excited to share these trading patterns with you and talk more about Forex. So my name is Raman. I am the founder of Trading with Business website. So in today's meeting, we will look at how to use reversal patterns to identify change in market direction. We'll look at the top two reversal patterns that I personally have found to be most useful. We will also look at how to read price action based on these reversal patterns and how to actually identify and get into the trades. And then also how to properly implement this strategy so that we are actually making money. All right, so just a quick disclaimer here. This is for educational purposes only, in the sense that I am not a registered investment advisor. I'm not offering any investment advice of any sort. If you have any of your specific investment needs, I encourage you to go talk to your investment advisor. So let's get started with our webinar today. Okay, thanks, Justin. Let me see what I can do here. Let me unplug here. Okay, how is this? Do you still hear the background noise? Take a look at no background. Perfect. So let me see if we have. Okay, great. So all right, let's continue on then. So a little bit about me. This is me. I am a Forex trader. I've been trading in the Forex markets for about 7 years. I have a background in finance as well. Perfect. So I have a background in finance. I have 2 master's degree, and prior to that, I have a computer science degree. So I have spent a lot of time in banking and financial industry, and I have also prior to that, I had my own business in IT consulting for about 10 years prior to that. So in terms of Forex trading, I am just really passionate about trading. This is an interest that I found a few years ago, and I have basically gone through my trading journey. Kind of looks like where I was trading part-time, then I started trading full-time, and I have kind of gone through the gamut of feelings and emotions and making money and losing money with trading. I was a profitable. At first, I was kind of doing it on the side. I was profitable. My IT consulting company. I decided to go into it full-time, and I just found that it was really isolating. I made a lot of money. I was making 6 figures. And however, I found it to be very isolating, and it was just hard from the psychological perspective, because when I was working for myself, I used to see a lot of clients. I used to talk to a lot of people. I had a lot of social contact. However, when I was trading on my own, it was just difficult because there was really, I was with my computer and there was no one around. So what I have decided to do is surround myself with other successful traders. And I went actually looking for successful traders. It was hard to find other people who were successful like me and were making the kind of money that I was making. So it was hard to, and some people that I found, I later realized they were not what they said they were. So that kind of turned out not such a good thing. So what I'm doing now is, the purpose of this is really offering a lot of free content. I'm doing a lot of webinars and so forth, and I'm really working hard to surround myself with successful people, because that's where I am at, and that's what I want to create in my life. They say if you want if you want to see where you're at in life, look at your 5 closest people, and that will tell you from, from any kind of perspective, actually, really financial or even, even if it comes to like losing weight, for example, if you're surrounded by people who are are not healthy, you yourself will end up, you just don't have that push healthy. And same way in Forex, in making money, if you're not surrounded by people who are doing really well, you won't have the push to do well. I found that a little bit of healthy competition and a little bit of exchange of ideas, support, and helping each other goes a long way in terms of making money. And the reason I want to do forex trading is really, one, I am really passionate about it. I can talk about trading all day long. You could just keep on asking questions, and I will keep on going. So that's something that I kind of need to watch. But anyway, I am really passionate about it. And I found that anytime I work in teams, I have found a great deal of success. So that's another thing. And also, I want to create freedom in my life. I have worked at jobs where I've been paid up in 6 figures as I'm doing now, but in terms of the freedom, like the financial freedom or personal freedom, that's lacking. You can't just come home whenever you choose to, and go up to if you're you can't just show up to it if you have a client meeting, for example. On the other hand, so this whole forex is a very, very good practice in the sense that it gives you freedom in terms of money. There is unlimited potential in how much money you can make. I'm not saying that you can make, like, take $1,000 and convert it into $1 million account. You will never ever hear me say that. It does take a lot of work. However, if you follow the process and if you implement the strategies correctly, it does have a lot of potential. It does take a little bit of discipline. However, there's a lot of potential. You don't have to deal with clients. You don't have a lot of people or anybody really breathing down your neck. You are completely independent in terms of that. So when I was doing my business, my IT consulting company, I found I was at the back of my clients all the time. Whenever somebody wants, I have to do basically work around their schedule when problems arise there. So it was a lot of basically bending over backwards for my clients all the time, and it kind of takes over your life to an extent. So this, the forex, you're your own boss, you're watching the computer, and then you're chatting with other successful traders. So I'm looking at creating a positive environment, and then you are your own boss. You don't have to listen to anybody, or you don't have to work according to other people's schedules. You can pick when you want to trade, which session you want to trade, and you can follow your strategy. So that's a little bit of background about myself and why I'm in the Forex field that I'm in. All right, so let's take a look at what is Forex. So people who may be new to this field, I'll just quickly cover what the industry is about, and then we'll go into the reversal patterns. So first of all, Forex is trading currency, short for foreign exchange. It is the largest market today. If you look at, for example, the New York Stock Exchange, the daily turnover rate in the New York Stock Exchange is $50 billion every day. And if you look at Forex, we are looking at $5 trillion. That's the amount of money that's to the market every single day. So the market is a lot of opportunity to It is a highly liquid market. A lot of times you find, for example, if you're doing stocks, there has to be, in every market, there's somebody on the other side of your trade. Somebody, when you're wanting to sell, somebody needs to buy. And when you're wanting to buy, somebody has to be willing to sell. So in this market, we find there are tons and tons of buyers and sellers at any given time. It is not based just on speculation. There are transactions that go to the market. For example, when somebody does a merger and when there's a merger and acquisition, let's say a company acquires another company. Let's say, for example, it's a company that is in multiple nations. It's a worldwide company. We may have, let's say, Philips acquires another company in Europe, for example. Let's say. So they would have to then make a payment in euros to actually buy that company, or when the transaction goes through. So this has nothing to do with speculation. The money is exchanging hands in the market because there's a different activity going on, not just speculation. So because of that, it creates multiple opportunities for money to exchange hands, and which is where liquidity is created in the market. So somebody is there on the other side to buy or sell from you, not just purely based on speculation, because they really need they need to trade their currency if they need the money. For example, if you travel from one country to another, you have to exchange the currency. So there are millions of these transactions going on, and that's how you can get people overbuilt, because there's somebody on the other side of the market. Whereas where we find in stocks, for example, stocks trading, in equity, sometimes you have to wait for your order to get filled, because somebody has to be willing to buy or sell at that point. And if you don't have, sometimes your order may sit there for a while because you just don't have the person on the other side willing to transact with you. You won't find that in Forex industry. Anytime you want to place an order, there's usually somebody there to actually transact with you. And it's a market open 24 hours a day. A lot of equity markets are going to close when I see on Eastern, for example, but Forex market is something that is open 24 hours a day. The only time the market will close is on the weekend. And that too, it closes at about 4:35 on Friday, depending on your broker, and then it will open about 6 p.m., approximately 5 to 6 p.m. Eastern time on Sunday. Those are the 2 days that the market is closed. The rest of the time it's open. So there's a lot of opportunity to actually enter in the market at any given time. You don't have to wait and trade whichever time or time frame you like. And then how do you actually make money in Forex? So let me just cover that quickly. The way to make money is by buying and selling currencies. So for example, you may buy US dollars, and then we may be selling euros. So that's called a short euro-dollar trade. And then, for example, you may be buying pounds and selling US dollars. There's always one currency. So it's always a pair. You can't just sell one currency in vacuum. It has to be something on the other side of it. So we may have euro dollar, pound dollar, Aussie dollar, or New Zealand dollar versus Australian dollar. So there's always a transaction between there's always two currencies involved in a trade. However, you have a for sell. Sometimes in a lot of other markets, you may be looking for example, you buy a stock, you're waiting for it to go up, and once it goes up, then you actually sell it. You can also do short selling in stocks, but the tendency of the market normally is you buy a stock, wait for it to go up, and then sell it. However, in Forex, we can make money on both sides. We can either buy or sell a currency. For example, we can go short on euro dollar, which means we would sell the euros and buy US dollars, or we can go long on euro dollar, which, for example, which would mean you're buying the euros and selling US dollars on the side of that. And when you close your trade, you would do opposite of that. So you would, if you're in a short, basically, then end of your trade, you would buy the euros and sell the dollar. So you have the capability of trading in both directions at any given time in the market. There's absolutely nothing stopping choosing which direction you want to engage in the market, whether you want to sell or you want to buy. And then we can have long or short-term trades. Okay. Let me. Is anyone else having trouble with the audio? Let me see. Make sure everybody is muted. How's that, Justin? Is it better? So everybody should be muted now. A little echo. Okay, I am not sure. I'm using my usual headset. Now try to bring it closer to my mouth there. Okay, much better. Perfect. So I moved it closer. Everybody's muted. Great. Okay, so let's continue on. Okay, perfect. Thanks, Sanjeev. Okay, so you can take short or long-term trades. You can be a day trader, which means you close out the trades this very same day, or you can be a long-term or a swing trader, which means you may hold on to your trades for a few days, or you know, even months at a time. For example, hedge funds, for example, will hold on to the trades for a long period of time. So you can choose which what kind of a trader you want to be. And then we do market analysis. We every morning or before you trade, you want to look at where the markets are, what happened in the market prior to you coming into the market, and what the result, what happened up to this point, and where. And then within that, you look to see what are the best opportunities to take trades, what levels will be the best levels based on your based on your technical analysis. For example, you would decide where you want to take a trade, and then you also do fundamental analysis, which gives you an overall view of the market to understand what the different, for example, the currencies that you're trading. If you're trading a euro, what's happening in the eurozone? If you're trading the pound, what's happening in the UK, and within the, are there interest rate news going on in the market, or what's going on in the overall market? And within that, you do technical analysis, which is looking at the charts to figure out where the best levels are to take the trades. And then you also need trading strategies, we'll cover two of these today. And then you trade on margin, which means, so if you buy stocks, for example, I keep going to stocks because I mentioned stocks, and it's just something that everybody knows. Everybody knows the stock market and that you buy stocks. So when you do that, you actually need to have your own money in the account. So if you want to buy 1,000 shares, and each share, for example, is $100, you're looking at $100,000. You need that in your account to be able to hold those shares, to be able to buy those shares, to own those shares. However, in the Forex, you actually trade on margin. So basically, you don't need, and different brokers will offer different margin levels. So you can do like a 50 to 1 margin level. You can have 100 to 1 margin level. Some Forex brokers even offer 200 to 1. I don't recommend too high margins, because then you have too much leverage. Is also can be a bad thing, because they could give you an impression that you can do a lot when really you shouldn't. You need to manage your risk. So I don't recommend like 300 to 1 margin. That's just too much. However, you have that leverage. Basically, you are borrowing money from your broker to engage in the trade. You only need a portion of that money in your account. So let's say you are trading a standard lot. You could trade that with $1,000 in your account. I don't recommend doing that. If you're going to trade, one standard lot, I recommend having at least $10,000 in your account. However, that's 100,000 units that you're trading, but you're able to do that with $1,000 in your account. So that's where the leverage comes in, which means you have opportunity to make money even without using your own money. And the way the broker makes money is from the spread. So when they quote you a price on a currency, they would say, I will give this to you for $12, when the market price may be $10. And that's where they make the money, the 2-point differential, that's called the spread. And that's where they make the money. So unlike stocks, where you may pay like $7 per trade, or you may pay $30 per trade, there's no commission. Well, there's no commission in normal accounts. You can get accounts where you have commission. So when you start trading really large numbers, for example, you have, let's say, $50,000 in your account, or $100,000 in your account, you want to trade commission plus spread. In that case, your spread will be really small. And well, that's the kind of account I have, but I have the other account too, where you don't have you don't pay commission on each trade. It's just covered in the spread. So there are multiple ways of actually trading, but the point is that you have leverage. So you don't actually need to have $100,000 in your bank account or in your trading account to be able to trade. you can start with $1,000 account. I would suggest taking on less risk if you have a small account like that. However, you can still make money and you can build your account to the point where you can actually grow and start taking bigger trades. All right, so now let's take a look at reversal patterns. So there are multiple strategies to trade in the Forex market, and one of those would be to trade what's called reversal. So reversal patterns basically show you the change in the market direction. So market may be going up, which means it's a bullish market, and then you see a reversal pattern form, and that's when you know that the market may be changing directions and it may start going the other way now, so it may start going down now. So these patterns help us identify these reversals or changes in the market direction so that we can get into a trade and make money by doing that. There are all kinds of different patterns. There's bullish and bearish patterns. Bullish patterns are the ones that set up in an upwards trending market. So when the price is going up, you have, when the price is going down, the bullish pattern will set up to show that the market may start going up. Bearish pattern sets up in a bullish market, which means the prices has been rallying for a while, it has been going up, and then you will see a bearish reversal pattern, which would suggest that the market is about to reverse or start going down. So that would be your bearish reversal patterns. And they set up in all different time frames. So you can see patterns, reversal patterns on monthly charts, you can see them on daily charts, you can see them on 4-hour charts, 15-minute charts, even a 1-minute chart. So depending on the type of chart that the charts that you're trading, the time frames you're trading, these set up in all different time frames, and you can use them in different time frames to make money. And then there are different types of reversal patterns. First is double top, double bottom. These are the ones that we will cover today. We also have engulfing patterns. There's morning and evening stars. There's dojis. So there are different types of patterns that you can use in your trading. The ones that I have found to be really helpful, and there are different strategies that use these different patterns, but the ones that I tend to use a lot in my trading is this double top, double bottom patterns, which we'll discuss today. And I have found them to be highly profitable when they set up. Okay, so let's take a look at double top pattern first of all. A double top pattern is also called an M pattern. It is formed in, this is a bearish double top. It will be formed in a bullish market, which means when the price is going up, you will look for this double top. Which looks like that. So there are two peaks, they're kind of like mountain peaks. So there are two peaks. One, the price comes to a level, it gets rejected at this level, it's not able to hold above that, comes down, and then goes up again to test the previous high. Sometimes it may go a little bit higher here, or it may be a little bit lower. But what you will notice is you'll see two different peaks, two different mountain peaks like this, and then you will see a little bit of a pullback most of the time, and then the price finally breaks through. So this is the double top pattern. So it's formed in the bullish market, which means it indicates that the bullish market or market that has been going up is about to reverse, and the price will start going down now. And the price fails to go through this twice. That's why it's called double top. And the way you're looking to implement is that you're looking for this pattern at an important support and resistance levels. So sometimes these patterns will form, let's say market is just going sideways, which means it's not going up or down. So it will form in that market, and that's not when you want to take a trade. You want to take a trade when it's an important support and resistance level, not just, so you want confluence of different things coming together to be able to take the trade. You don't trade in, just based on one thing. You layer different things on top of each other to give you a higher probability for that trade working out. And that's why you're looking for a major support and resistance level. And again, it sets up in different time frames. So you can find it on a 5-minute, 15-minute, 1-hour chart, all different time frames, the pattern will set up. So again, it looks like this. The market will be going up, and then price will come to a major support and resistance level, and then it gets pushed down. It tries to go up one more time to test that level, but then fails to break through or hold above that level. So you'll draw your line here, and then the price breaks away from that. So the way you would look to get into this trade is, see this, so this is not my chart. This is something that was created by Chart Advisor. So the way, see this little pullback that you have? That's what you're looking for. You're looking for a pullback in the opposite direction of the trade that you want to take. So if you want to go enter into a short trade, you're looking for price to pull back up. Because what we have seen is that when the price gets rejected 2 times like this, it may not come back. Sometimes it may come back 3 times to test the level, but most of the time, a lot of the time, it won't come back. So we're looking to get into a better price, which will be on a pullback. So you look for a pullback, and then you enter into this direction of the trade, and you're looking for a price to really break through this level, which is the breaking point between the, where the M, or the middle of the M there, the valley in the M. So you're looking for the price to break through. So once the price breaks through this level, your trade is profitable. So that's what you're looking for. So this kind of looks like an M, and that's why it's called an M pattern or a double top pattern. So let's take a look at a couple of examples here. So this, for example, so in the picture, it looks nice. It looks like 2 different peaks. It's, beautiful. However, on the charts, this is kind of what you will, this is an example of what you will see. You will see multiple candles that form the first peak, and then multiple candles that form the second peak. So if you look at it, it will look like an M, but it's not like a straight M. It looks like this with multiple rejections on both sides. But it will be an important price point where it's being set up, and that's what you're looking for. And see, if you look at these little candles here, there's a pullback. Where you see the pins, there's a pullback, and then the price goes down. So let's see if you can find, to have another example here. Yeah, so this is, again, another example in this trade. This is a double top pattern. There were 115 pips in the trade. So each pip on a standard lot is $10. So you're looking for 1,150 pips in this particular trade. And that's on just one day. So this trade happened over the course of, this is a 15-minute chart. Actually, let me pull it up, see if I can find this trade here. I marked it up here. So here we go. This is my real chart, my chart that we use to trade. So here is the pattern. So here I have marked an important level. So this is 5,800 level. The 0 levels are usually very important in trading, in Forex trading. So we pay special attention to that. On my higher time frame, I would have marked this level, and then I would bring it down to my lower time frame, which is my 15-minute chart here. So as the price is going in this direction, we see this big inefficient move here, and then the price comes to this 5,800 point, and it just stops and turns down. And here's the bottom of that M, the breaking point that we were talking about. And then see how the price comes and tests the same level. It doesn't hold above. It never closes above. It gets rejected, which we can see from this wick on the candle here. It gets rejected, and then it gets rejected again. And as you can see, price starts traveling down. So here you will see this. This is the M pattern. So once you see this forming, let's pretend this side didn't exist. So right over here, see how it gets rejected, because you can tell that by this big pin on the candle, and then the price moves through the breaking point. So you want to look for this pullback here. See, the price will start. The reason there's a wick here is because price will start moving up, and that's what you want to look for. You want to get into the trade right at this line that I have. You wait for the price to pull back. And sometimes you may just get in over here, which is fine. You pull it back, you bring it over here, and then you enter the trade, a short trade. That's what the double top is for, entering the short trade. And then as you see, the price, it came down quite a bit. It started at 5,800 and came down to 56.68. So that means there's about 168 pips, not about 168 pips in this whole trade. So if we entered in here somewhere, we would get 115 pips. So we're not going for the entire move. We're just going for, out of the 168 pips, we are going for about 115 pips, which is where we would see this setup, which is kind of like double bottom as well. So we'd see this pin set up at the bottom, and somewhere in here we would get out of our trade. So even with all of that, you would get 115 pips in this trade, which is equivalent to $1,150 in profit. And that's, you know, you do that once, you're kind of done for the week if you want it to be. But that's a nice little profit in the trade. Any questions on the double top here? Does this make sense? All right, so I will take a silence as a yes. So let's move on. Now let's take a look at, so we talked about the double top. This is just another trade example here. Let me see if I can pull that up on the chart here as well. I think there's the so this was in the pound that we looked at, pound US dollar 15-minute chart. Now let's look at an example in the euro. So same sort of pattern here. So we have price moving up, comes down to a breaking point, goes back up again, and then finally breaks through the breaking point, comes back. And this is where we would be looking to take the trade. So you have this M formation. So here in this case, the price was at 109.20. 20 levels are, again, one of those important levels that you want to pay attention to. Here the price went through slightly. One of the things you will learn in Forex that there's no perfection. So you have to make a judgment call here. So the 20 level we know is a very important level. And here we saw a price try to go through, then came below again, came below. Just wasn't able to hold above the 20 level. So that's good, because we know 20 level is important. We know price is not able to hold above that level. And then finally price breaks through the bottom here to the breaking point. And then it comes back for a retest at the bottom. And that's where we're looking for this pullback to get into the trade. And it is, in this example, there were about, so here we have, price went from 920 to 820, so there's about 100 pips in the actual move, and we're looking to get out with about 85 pips or so. And even if you get like 75 pips, you're still lots of money in the trade here. This is about $850 if you get 85 pips, and so very nice trade. Again, this is on a 15-minute chart, so it's set up the same. It's a one-day trade. You're not holding on to it for long periods. Okay, so all right, so let's go back to this trade here. So the reason, what I would look for to get out of the trade would be this. See how the prices come. Actually, let me look at the chart that I marked, 115 pips. So see how price has come to this level, and it starts doing these pins. It starts throwing pins, which means the price is not willing to go below this level. The price is getting rejected at this level, which is a good indication that the market may change direction, or it may go sideways, which is what it did. Sideways means there's no trend in the market. It's not going up or down. It's just not doing a whole lot. It's just going sideways. So here we look for candle patterns, and we'll look at, like, you know, when I teach, we'll talk a lot about these pins, because these are an important factor that we look for when exiting the trade. You look for pins into a level, you know, price is not able to hold below this level, and it's also an 80 level. So if you look right here, it's actually this right here level is the 80 level. 80 levels, just like the 20 levels, 0 levels, are very important levels. So when you see price start doing this at an 80 level, you know that price is not wanting to go below. So this is a 15-minute chart. So price sat here at this level for 15, 30, 45, and then 1 hour. So in an hour, price was not able to go anywhere, and then it starts closing above this 80 level. So as you see here, it looks like price will start moving up now. So that's when you want to just take your money and get out of the trade. There's really, if after making, you know, anything 100 pips is great amount of profit. So you don't want to sit in the trade for way too long. you just take your money and just get out, and you close your trade. This is another rejection pattern. So this is something you have to keep in mind anytime you see pins into a level. See how we were seeing pins into this level here as well, which is rejection of this price, and that's what we're looking for, price rejection on the other end for an exit into the trade. So anywhere in here you would get out of the trade. Make sense, Justin? All right, so that was the one pattern that I look at. So the next one, which is the opposite of this, is the double bottom. So this is the second pattern that I have found to be very successful, very profitable in my trading. And I tend to look at these. So I talk about my signature trade. So when I do my own trading, I'm big on reversal patterns because I really look at them. Well, they give a good indication of the market direction, and I'm looking for confluence at that level, confluence of different things coming together to enter into the trade. So reversal patterns are a big part of my trading. Whether you're looking for trend trading or counter trend trading, they are good in both types of markets. So now let's take a look at the double bottom pattern, which is also called a W pattern because it looks like a W at the bottom. It's formed in the bearish market, which means if the price is going down and you see a W pattern, which means that's a good indication that the price may start going back up now. So it's formed in a bearish market, and we're looking for the price to go up. And again, price fails to go through a particular level twice, and that's why it's double bottom. And we are looking for an important support and resistance level for which to look for this this double bottom. You don't just take it just because. You have to look for a major support and resistance level, which increases the probability of making money in the trade. And that's what we are looking for. We're only looking for higher probability trades. You don't take anything and everything that you see. You only look, you wait, and you look for high probability trades, and that's when you get into the market. And again, this sets up on multiple time frames, whether you have if you're a longer term trader, your monthly, weekly, and daily charts, or if you're a shorter term trader, this would set up on your like a 15-minute chart, 5-minute chart, hourly chart, any of those charts. Okay, so there's a lot of flexibility in the pattern. So here is an example. Again, this is from Chart Advisor. So you're looking for this bottom, two little valleys here. So they're, just pretend they're opposite. You flip the mountain upside down, and you're looking for these two upside down peaks in the price, which really means that the price came and tested this level, wasn't able to hold below, which means nobody at this point was willing to sell. So the market starts going up. Again, it comes to test this level again. Again, it does not find enough people in the market to be able, who are willing to sell at this point. So the market price starts going up. So this is what you're looking for: one test of the bottom or test of the level, second test of the level. Looks like a W. Again, there is a breaking point. The price goes through. And you're looking to enter the trade, and then somewhere up there will be a target, which will be another support and resistance level. So let's take a look at an example. So here, this is a New Zealand US dollar 15-minute chart. Again, like it sets up in all the different types of currencies, so you can choose which pairs you want to trade. Each pairs have their own kind of vibe to them. They have their own quirks. So when you decide which pairs you want, you get to learn these quirks. You understand how the market behaves with these pairs. So you kind of start understanding them, and so you can choose whichever pairs you want. So here is a New Zealand US dollar 15-minute chart. So this is the first bottom, and here's the second bottom. And sometimes these charts won't look perfect like they do here. They will look like this. It's still a little W, but it's a little bit of a wider spread W. So again, the price. This is an important level. We'll look at the chart here, a live chart, in just a sec. But here in this picture, this is a support and resistance area. Like I said, you need to mark your support and resistance area. Then the price bounces off of that. it doesn't go below that. So as you can, like, even this here is a double bottom here because the price came to this level, then bounced off of this, wasn't able to hold below this level, then comes here, isn't able to hold below this level. So even this you can consider, double bottom. However, we're looking at this one here. So the price, the third time or the second time, let's ignore this for a second. The second time the price comes, it still isn't able to hold below. Like this time, it doesn't even go to touch this level. It just kind of stays up here, which is a really good indication. So sometimes you'll have W's that are perfect, like perfect at the same point, or sometimes you'll have one leg will be higher than the other one. And sometimes it will try to break through the price and then maybe stay there for a little bit and then comes back into the level and then isn't able to hold below. So those are some of the variations on the pattern. So this one here doesn't quite come to back to this level and then stays up there and then finally breaks through. So let's go take a look at the actual chart here. This was New Zealand dollar here. So here we have this level, which is 68.79. So 68.80 level here is a very important level. Like I said, 80 levels are important. So we see the price throws a pin into this level, which means it's getting rejected. Here, this was a news event, and even in the news event, the price isn't able to hold below this level. So anyway, so that's an important. So we know it's an important support and resistance level. And the price comes in, and again, it throws a pin into this level. It rejects the level. It's not able to hold it below, and then starts moving up. Then comes again to, and doesn't quite get to that level. It's kind of stops at the 85, 86 pick. Let's see, where is it? So this is 89 pips. So yeah, 89, 68, 89. So it's about 9 pips higher than the 80 level. So it's not able to quite get to that level, and then it starts moving up. So we will look for this breaking point. So in this case, like I said, it doesn't always come and do a test. So you would have to enter the trade in here, or you can just enter the trade in here as well, because this is a good. This was a 6,900. Is a good, again, zero levels are very, very important. So it holds above this level. And once it does, then it comes and does a back test of this level. And then you can enter into the price as well. So again, there's like 75 pips in the whole trade here. Sorry, there's more than 75 pips actually. So from here to here, this was 102 pips. So we are just looking for, out of the 102 pips, you're looking for 75 pips in profit. You could easily get 75 pips. Once the price starts rejecting here, see how price is rejecting? It just starts throwing pins into this. You know that the chances are really high that the price won't be able to hold, is not wanting to go higher up. So you exit your trade somewhere in here or somewhere in here, especially after this big rejection. That's a huge rejection. You just exit your trade, and you take your $750 profit, and you call it a day. Any questions or comments? Does it make sense? All right, so those were the two patterns that I wanted to talk about: double bottom and double top and double bottom. These patterns I use in my trading all the time. Again, my signature trades includes looking for these patterns. So those are the two trade strategies. Now let's take a quick look at the course that I teach. So the course that I teach covers those reversal patterns, and it also covers the other reversal patterns that we talked about earlier, the engulfing pattern, the dojis, morning and evening stars, and so forth. So I will cover all the major reversal patterns, because we do look for these reversal patterns to get into trades. So in the course, I have a course called Learn to Trade Forex, and apparently I can't spell. Learn to Trade Forex. It is 8 live online training sessions. It starts next Saturday, actually, so July the 11th, and we go on for 8 weeks. We have August the 1st will be a week off. So it'll be 4 weeks before then, 4 weeks after then. So we would we'll have a similar session like we are having here, a little bit longer. It goes on for a couple of hours. And in the sessions, I take you from the very beginning and help you understand what the Forex market is, how to look for trades, how to do market analysis. I take you through my step-by-step trading process that I've developed over the 7 years or longer that I've been trading in the markets. If you count demo trading, then it's longer. So 7 years of live trading, that things that I have learned and things that I've paid a lot of money, a lot of heartache by making all the mistakes, things that I've learned. So I can save you a lot of money by helping you not repeat those mistakes. So and I will share stuff that actually works for you, so you don't have to go try it on your own. You can just take a true and tested strategy that actually works and start making money. Again, I'll cover my 3 signature trades that I have that I use. I get trades based on these trades every single week. So you're not waiting for months to get a trade. You're looking for trades every day. And actually, so we looked at some of the strategies that make like 100 pips or 75 pips. I only suggest looking for 40 pips a week, because if you just can consistently make 40 pips a week, you can get rich. And that's something that I will cover in the course. We'll cover how we can make 40 pips and you can get rich over 40 pips. So, which is actually quite fascinating. A lot of times people think you need to make thousands of pips. You don't. You can actually make very, very good living just on 40 pips a week. So that's something that we'll cover as well. And one of the things that I'm very big on is risk management. You want to keep your risk low so that you're able to stay in the market over the long term. A lot of times you'll see traders crash and burn, which means they take on too much risk and then they end up blowing their account. I have personally done that initially in my trading, so I know firsthand how it feels to lose all your money in trading, and I do not recommend any of you do that. So I will teach you how not to do that and actually keep your money. And of course, we'll look at how to enter the trades, how to exit the trades. This one we were talking about just one exit and one entry there. What I normally recommend is to have 2 or 3 profit targets, so at least you get some of your money out. So even if the market didn't go for 200 pips or 100 pips, at least you get some of your money and you're in the positive. So that's all that I will teach in the course. And then we have why should you take this course? One, I keep things really, really simple. I am not a big indicator person. I look at price action. What's price doing? And that is the best indicator in itself. Most of the indicators are lagging indicators, so they don't usually, they're not very helpful. So only the real one indicator that I use is this volume indicator, and I will go over how to combine the volume indicator. So how do you tell, looking at the volume, that the price is going to turn at this point and will start going upward? So I will take you through what kind of stuff you're looking for in doing that. And then we also talk about deliberate practice. One of the things that I find is really lacking in the courses, in the Forex courses, that nobody helps you practice. So let's say if you're in sports, you need your coach to help you practice. Like, somebody needs to organize a practice so you can all get better together. You can't just go into an NFL game and start practicing there, because that's not the practice ground. Practice happens outside of your trading. Just like in football, you have to practice before you go into an actual game. So this is where that's my core strength. I am really good at people development. This is just something that came naturally. All my life, I have been asked to teach. I have never really taught, because for some reason, it's just not been something that I have not found a subject matter that I was really passionate about to teach. I used to teach physics when I was growing up in school, just because I needed to learn it, so I would teach it to others. I just found it easy. And throughout my school, I've had a lot of parents come to me and asked help with their kids, or kids have come to me and students have come to me and asked help with their assignments and things like that. It hasn't been something that really drew me in. But Forex I am just so passionate about it that I like teaching this stuff. So I will help you create deliberate practices. So I bring my background in it to help you actually practice and get really good at it. We also talk about a lot of mindset hacks. Again, I had mentioned how I was isolated. Over the years, I have found strategies that work from the mindset perspective. You can have a really good strategy, but if you're not able to implement it, you won't make money. So I can help you implement these strategies, and how do you manage your psychology? Let's say you're in a losing trade. How do you manage your psychology so that you get out of it with the least amount of losses? There will be losses. Don't forget that. This is, it's like in any game, for example. Let's say take baseball. How many times do they not hit the bat? Or the ball. The bat doesn't actually connect with the ball, and that is huge. So that's not a failure. That's just part of the game. Every swing you take will not hit the ball and knock it out of the park. It's not going to be a home run every single time. So you have to recognize and manage those losses so that they don't overtake your trading. You still want the high percentage of your trades to be profitable trades, and that's where you become consistently profitable. So I teach you how to do that. We talk about some peak performance strategies as well. So again, another thing that seems to be lacking in a lot of the courses. And I have to say, every single thing, well, not every single thing, but things that I've really focused on, I have gotten really good at. So I came to Canada in '97, and I had like very little money in my pocket. And from there on, I went from not having even like 50 cents in my pocket to buy a pop to, if I look at my life today, we have portfolios, we have rental properties, we have, I have six-figure incomes. I've come a long way. And from that, like being from a small town in India to attending an Ivy League school, it's quite the journey. So I have used strategies that have helped me get to that place, and I will share all of those with you. And of course, I can save you a lot of time and money and losses and in learning these concepts. So the course is only $499. So this is the only time I will offer the course for this amount of money, because I have been told multiple times I'm just offering it for too cheap. So however, this time this is the price I will offer. That next time it will go up, but for now, I really want to create some success stories, so that's why I'm starting here. So you will also get a 2-month access to my daily analysis calls. I usually charge $199. In this call, you see how I do the market analysis, how I look at different aspects of the market, how I identify the trade setups to take and at what levels to take the trade. So this is something that we do every day. You'll have access to a private members forum area where we post the different trade ideas. We look at, so you have an opportunity to submit your trade. I will take a look at it. I will review your trade. I'll provide feedback on it, how you can improve it. So there's a lot of like a personal attention that you can get there. And usually on Sundays, I do advanced trading technique sessions. You'll have access to that as well. And of course, you'll have access to all the recorded sessions, the training sessions that we do. And you'll have access to me, email, Skype, and during the calls that we do. Here is the link to the course. We'll be closing the course soon because it starts next week. So I suggest you go if you're interested, go and take a look at it, or go to this link and register for the course. You will find the course very, very helpful. I'm one of those people who goes all in on anything I do, and that's what I'm doing here. I'm going all in, and I think Justin's probably seen that with all the different things that I'm doing. So I'm going all in Forex trading here, with the courses here. So when you join my course, you will not get, I can guarantee you this, you will not get more personal attention from anyone else than you will from me. Because I'm really seriously committed to your success, because it helps me become successful. Because like I said, I want to surround myself with other successful people. So I do want to make sure you become successful. So that's what I have. Any questions or comments before we wrap it up? All right, so that's, we'll call it a wrap. If you have any questions for me, feel free to send me an email at raman@tradingwithvenus.com. and I'll see you in the course. So bye for now.